Good day, guys. Okay, I'm Charles once again. So today we'll be talking about market mechanics, what I do trade, because I've been getting a lot of questions from my friends and some of my followers that what I trade. And then when I tell them that I trade market mechanics, they just don't understand what I do mean. So let me just show you guys today what is market mechanics, right? So market mechanics it's not a strategy, it's a concept, right? It's an idea that consists of trading four different strategy all together, combining everything, making all these strategy work together at once, not disrespecting another strategy on top of the other, right? So market mechanics comprises of key levels which serve as support and resistance, or market structure which serve as SMC, and trend lines which guide you along the way, and uh, price action and advanced price action which on your lower time frame give you a good confirmation to take your entries and to exit and give you a better stop loss. So that's just it about market mechanics. So let me dive in the chat to show you guys what I do mean about market mechanics. So first off, in trading market mechanics, you have to start from your higher time frame because you have to understand your buyers, right? And your buyers often come from a higher time frame. So we start on marking our key levels. So this is our key level, and sorry, let me make this blue. Okay, and what are key level? Key levels are area on the chart that price reacted from strongly in the past and might react at that same area in the present or in the future, right? So for this is a key level because price reacted from your pullback. So when price break this, price came back, this level serve as support, came back again, serve as support, came back, break, and then serve as resistance. So that's just the idea of key levels. And key levels are also area that when price reach, you are expecting two things. You're expecting reversal or continuation. So that's the importance of key levels. Key level just there to put you on track, to not forget about yourself in market mechanics. So after marking our key level and then after understanding our key level, we start to mark our market structure because we have to understand the bigger picture of the market, right? We can't just rely on our key levels. So we have to understand what price is doing, what price is all about. So that's when we start to mark our market structure. We move to our SMC, smart money concept. So we had this breakout structure here to the upside on our higher time frame. This BOS. I know some traders think like we are in a downtrend. No, but here is it. Our overall trend for gold, we are still in an uptrend. Don't forget, right? But when price make this breakout structures, price make this huge displacement, right? There's an inefficiency, there's imbalances. So what price is doing right now, price is just pulling back to fill in all this imbalance to make this market efficient, because inefficient are like a mistake, like a displacement. So price is just trying to right their wrongs, trying to fill in all these imbalances, correct their mistakes, and then push back to the upside. That's what price is doing. And and when you see here, there's our protected low, right? Our extreme low. And what do you notice? Price have not yet break this extreme low. So definitely we're staying in our uptrend. So whatever that is happening in our extreme low and our extreme high is just internal. So all this price action here is just internal. So and right now we are not focusing on our overall time frame, right? Not our overall time frame, but our overall market structure. We are only focusing on what price is doing right now. And what price is doing right now, price is pulling back and price is bearish for now, right? So our internal structure, we are bearish because we have this internal broker structure here, RBOS. That's why I call them internal, because they are in the overall structure. We have another internal broker structure here. And this will have another little broker structure, but this is an inducement. And what are inducement? Inducement are like a trap that smart money set for we retail traders, right? So, and why this is an inducement broker structure? Because this broker structure didn't reach the premium zone or the OTE. They didn't reach the 50%. So if you take your Fib tools, your Fibonacci tools to calculate from the swing high to the swing low, what do you observe? You observe that this broker structure never reaches 50% or this OTE. So definitely we'll be taking the broker structure out. Price was taking this one out. This is not valid, but we'll just mark it. So after understanding your market structure, after knowing that we are in an uptrend, our overall bias, but prices are just pulling back to fill in these imbalances and then bring it to the upside. Understand all that. Will also respect our key levels and then mark them, and then we need something to guard us, right? Because we need guardians. So here we come with our trend line, right? So our trend line is just to put our market in good structures and to give a better confirmation and what guide us on our way to success. So this is our trend line, because and what make a trend line valid, right? When you have 2 to 3 touches on the same level, that is respecting the same level, right? So trend lines also to serve as like a support and resistance, right? These are level when price reaches, price reacts. So we have first touch here, we have our second touch, and we are expecting our third touch, which is here. And our third touch is also in our OTE and also on our trend line to push this market to the downside. Because if we want to sell this market, because right now our overall bias, we are in a downtrend, price is pulling back. I don't know if price might break this, but I think price might. I'm not too sure. So we just have to trade the market, what the market is doing right now. So we use our Fib tools again and calculate from the swing high to the swing low. So if we want to sell this market, we'll not sell this market from here, no here. We only want to sell this market at a very key level or at our OTE. And this green box you see here is our OTE. This is a premium zone. This is a zone that seller will be waiting to sell this asset for a very good price. So we marked, and we also have a fair value gap or imbalance here that we're expecting price to fill. And what do you notice here, guys? You notice that this our OTE is matched with this key level. So this key level that we are looking at, so let me mark it green. Sorry, I make a mistake. Sorry, guys. I want to mark this key level green. Okay, this is our key level we're looking at, and this key level is also matched with our trend line that is giving us our third touch to confirm that okay, we are in a downtrend, right? So everything match. So right now everything is set, right? You have your OTE, your point of interest, you have your market structure, you have your key level that you might be respecting in the future. But you won't just sit down and then just wait for market to come here, because you don't know, you don't control the market, you are not smart money, or you are not the banks. So what can you do right now? You just have to trade what you are seeing right now. So you have to trade this market till this market reach up here. And how can you trade this market till this market reach up there? So that when we drop to our 4 hours, right? So when we drop to our 4 hours, what do we see? we have this another internal break of structure here, because we cannot just sit and wait for price to come here, because who knows, this might take 2 weeks, 3 weeks, 1 month, some days. So we just have to trade this market to the upside till price reach here, and then we'll start to sell again. So that's how forex trading work. You trade what you are seeing, what is happening on the chart. That's what you trade. Don't trade what you expect to happen. So we have this market shift here. This market shift already gave us the confirmation that okay, market have shifted. This is not a change of character, guys. This is just a market shift. Market have shifted in our direction, right? So market only tell us that okay, we are now going to your OTE, to your trend line, into that your key level. So market shifted. Market shifted to the upside. So market shifted to the upside on the hourly time frame. So you see how valid this market shift is. It's on the hourly time frame, not on the lower time frame. So this market shift is very, very valid. That's why you need to do your bias on your higher time frame. So if we want to trade it, what can we do? We take our trend line again, and then for guardians, right? So this trend line is just like our core model or godfather, like that, to guide or in our way of life. That's just an example, guys. So we have this first touch, our second touch, our third touch. So that makes this trend line very, very valid, right? And then we use our Fibonacci tools again, from the swing high to the swing low. And then what do we observe? We notice that there is a imbalance, and then price tap in this OTE, and then tap in this imbalance, and then ride it to the upside. That's the importance of OTE, guys. Before you take a trade, you gotta know your OTE, your possible trade interest, where price will be valid for you to take a trade. That's the meaning of OTE. So how I took my trade, or how you was going to take your trade if you're trading this, you're just going to like put your, for example, if you are here, so your stop loss right below this liquidity sweep, you see that was a liquidity sweep, and then you target your next key level. Like I told you guys, or key level also serve as able to take profit, able to look at, because I do know that if price come at this key level here, two things must happen: either price reverse or continue going, or break and retest and keep going to this OTE. So that's the importance of key levels on your chart. So this is how our trade was going to be like. But what if you didn't take this trade, you missed this trade, and you want to get back in? So that's when you drop down to your lower time frame, and that's when you'll be using your price action strategy, your price action idea, because your advanced price action is something that is happening right now, at this moment, at your current moment, right? So we have this internal broker structure here on the lower time frame, guys. This is just internal, and this broker structure is not 100% guaranteed, because anything on the lower time frame is not 100% guaranteed. So this is just okay. We have our internal broker structure. So let me make it not to show on the hourly time frame and the daily time frame, because it is not that important to me. I'm only using it because I want to enter this trade. So then we have another BOS here, and then what do we have again? We have market shift there again, because we already missed our first trade, and then we want to re-enter this trade, right? So we have our market shift here, market have shifted, market shift, and then what can we do again, guys? Again, we use our Fibonacci tools from this one, from this low to this high. What do we observe again? That's the importance of OTE. That's the importance of Fibonacci tools. As like I told you guys, everything is important on the chart, guys. try to use everything. Try to use all the strategy you understand. Try to use everything. So price swept liquidity. You see, just this one candle was a liquidity sweep, right? And then price tapped in this value order block. This was an order block. Price tapped into it. And what do you see again? Price fade in all these imbalances from the lower time frame. So after price tap in your OTE, what will you do again? You re-enter. So after this market, after this swept, you target this this key level. So that's how your trade was going to be like. Very simple and easy. So that's the importance of market mechanics, right? You have to understand everything that is going on the chart, right? Because everything is important. No strategy is bigger than the other. What key level will do for you, SMC will not do it for you. What SMC will do for you, key level will not do it for you. What trend line will do for you, SMC and key level will not do for you. What advanced price action will do for you on the lower time frame, another strategy will not do for you. So that's just the important, right? Or key level is there to tell you where price will be continuing or price will be reversing, or trend line is only there to guide you, and your SMC is there to put your market in push capture, and your price action is there to give you a better entry and to understand what price is doing at your current moment.